Hi everyone, it's Mike Smith here from Hawkeye Options. We're looking at a GM chart, and really it's an interesting market at the moment. We appear to have paused a little bit on the S&P 500's rampant move to record highs, and this is a sector which hasn't really performed well, irrespective of what the overall market's been doing. However, there are signs that perhaps things are turning, but nevertheless, if we look at the daily chart, we are still in congestion. It may be that this market suits one of the advantages of trading options, and that's the ability to trade a range. And we've been looking at GM here. We had this wide bar here, which we've recovered from and actually closed higher than the wide bar high that we see here on the daily chart. We've got some green volume coming in, some buy volume coming in on the daily, though it may be that we see that on the 2-day chart as well with the next bar. We've had green volume coming in for quite some time. And again, if we look at one of the advantages of Hawkeye, of course, it is that volume is a leading indicator, and we saw that come in on the weekly chart whilst still in downtrend and in congestion. So there is a bullish bias to this, irrespective of the fact that we think it could trade within a range. We see 32.50 on the upside. We obviously see $30 on the downside. That was obviously a little bit of a blip there. We recovered from it quite quickly. So what we're thinking is a range-bound trade with a bullish bias because of the green volume that we see and are likely to see on all three timeframes come the open of the next session. So we're looking to place a butterfly trade at 31 with our lower price leg, 32 being our so-called contracts, and our final leg at the top is a bought call at 33. So, for example, we may enter 20 of the 31, 40 of the 32, and 20 of the 33, with the intention that it will close somewhere in this range for the specific option time frame we choose. We wouldn't go too long, perhaps a end of August or September expiry. GM is one of the more liquid options on the market and does have weekly options available, so it may work to look 3 weeks away from where we are now, or perhaps even the 5 weeks to September expiry, which is on the 16th of September. So that's our potential trade for today, is a range-bound trade on GM. And that's just one of the trades I'm considering for today. So before we go, if you'd like to see everything I'm considering and see the trades I'm really taking, why not take a trial to my Options Elite alert and trading service? That way, you can see exactly how I find the best trades that can produce the largest returns whilst keeping the risk low. Just click on the link below and get started today. You'll be glad you did. See you soon.